Hi everyone, so welcome to Investing for Value. So today I'm talking about Starbucks Corporation, going by a ticker symbol SBUX. So current share price is $69.92, giving a valuation of $82 billion. So if you look at the 6-month chart, this stock used to trade around in the high 80s or low 90s, then basically got sold down during this period to $62. And as you can see, just stock jumped 12.5%, which was quite a jump, and which, the whole market was up on Friday. So you can kind of see the S&P was up 9%, the Nasdaq, Dow, all up 9%, which was quite a strong rally. Though I kind of expect things to be sold down over time again. You can't have a strong rise like that and not have people take the money. So what's happening with Starbucks? Is this a corporation to buy or not? So we can kind of see in the 1 year stock chart. This stock used to trade around $70 a year ago. Currently it's at $70. So in a sense, you're just going take away the premiums of what happened in the last 12 months, because to be fair, a lot of stocks sold at premiums, and now basically at $70 you're more or less paying fair value for the current situation. Though going forward, I think the stock price is going to be hit even more. And I think, because like if you look at here, it's only been in the last couple of years that the stock has been high. Before that, last 5 years, the stock was around, in the mid 50s. And if we take it even further, the stock's been, pretty low in terms of most of these things. Though it's a big question of like what impact does the current situation have on their business. So we can see the latest article, Starbucks to limit hours, have store closures, and basically go to just takeaway coffee because they don't really want that many people sitting in right now. They do have seating to sit in, though it's going to be limited, and potentially they'll have that social distancing, the whole term that's going around of how people should, kind of space their proximity to other people. So we look at the revenue. Revenue is 26.5 billion for last year, up from 24.7, and then up from 22, and then prior to that 21, 19, 16, 14, 13, and you kind of get the picture. This is a company that has been growing its revenues really well. So like in revenue wise, it's not a problem. Net profit wise, they've also done a pretty good job, apart from some inconsistencies. Generally, it's pretty high, like it's been going upwards. So you can kind of like see they used to be making like several hundred million, then they went over a billion, then they went over 2 billion, and then now they're challenging that 3 to 4 billion net income, which is great. And then we can kind of see like the markets this company is in. In the US, they have 8,791 stores, and you can kind of see like the total store numbers are 15,834. So that's easily half the amount of stores that are based in the US. So if the US market is the crown jewel, if it gets affected, this is a company that gets quite heavily affected. And we can kind of see like the second country that they were holding most stores was in China, followed by Japan, and in Canada. So the big question is what happened to China when they basically closed half their stores? So as we can kind of see here, the company released a report on this, and they currently expect 50% decrease in revenue for the second quarter. They think it's going to be, they think things are starting to get better again because they've opened up to 90% of stores. At first, they closed 50%, but then over Chinese New Year and all those other public holidays, they closed up to 80% of stores. But now they have about 90% stores open, except on more of a takeaway basis. So you can kind of see like this is a company that has gotten its operation back together in China, still in a limited way. So you can kind of see things have gotten a little bit better, and based on that, they expect 50% decrease in revenues, which is about 400 to 430 million in revenue, which isn't too bad because like we look at the prior quarter. Prior quarter was 7 billion. So you take away 400 million from that. It's not the worst thing in the world. It's it's not even 10% of the revenue, so I wouldn't be too fearful on that kind of situation. I would actually be fearful of the US market. The minute the US market gets hit heavily, that's where the real margins are, because they've got such a good system going right now that the minute the US is hit, it's not good. So the other big question is, can this company sustain itself financially? So currently they have 3 billion in cash, and the next 12-month debt is about 500 million. So 3 billion and 500 million. It doesn't seem like a big problem. And then you also looked at they on March 12th. They've also issued some senior notes, a portion at 500 million at 2%, a portion at 750 million at 2.25%, and then another 500 million at 3.35%, giving them a extra bit of cash of round about 1.75 billion. So there might be costs that have to be minus off that amount. So more or less we can go, this is a company that has about 4.5 billion in cash, 500 million in debt that's due in the next 12 months. Yeah, and then, okay, they do have like 10 billion in long-term debt, so I don't think the long-term debt's that big of a problem for, a very strong and stable company like Starbucks. Currently, what affects them most is store closures, limited hours, and just customers just staying at home. And if you have a recessionary situation where people have a lot less disposable income, they might not choose to go out and buy premium coffee. They might make their own. They might choose stores that offer cheaper coffee. So there's those kind of impacts. And you can kind of see, like, overall, when you add up the whole situation, you can kind of see things do not look as bright for Starbucks going forward, especially in the next 3 to 6 months. You can kind of see revenue kind of pulling back, their expenses going higher, particularly if you close stores, you're not generating revenue to cover your lease or your wages, so you've got those extra costs being a burden on your company. And if you have reduced revenue for your other stores, you might just only have enough money that covers your next your leases, your wages. So in a sense, I expect their net profits to be hit quite hard. Like, if we consider, like, from 3.6 billion last year, and then we go, what if this company was to sell a lot less? What if they only did 1 billion net profit, or 2 billion net profit? Currently, it sells at a 22.9 PE. If it did 2 billion in net profits, you're talking about a $46 billion company, and if they did 1 billion, we're talking about a $23 billion company, which is substantially lower in value compared to this 82 billion. Of course, of course, you're gonna look at the view and go, if, at the end of the day, like, and once these things are over, they resume their normal operations. They're a very popular company. People go back and buy their products, and everything is normal. Stock price comes up. Though currently, you gotta remember, it's a bit recessionary. People are fearful. People are selling down. People aren't thinking much about value as much as they are thinking about survival, right? So I can kind of see the stock selling down quite heavily. What kind of price zone do I see as being fair and reasonable? Um, I can kind of see this company cutting another half in terms of value. Of course, you might view that as being very extreme. This is just how I'm seeing things right now. Of course, things could change, they could get better, or they could also get worse. So if you brought it half its value, which is about $35, I don't think you could go too wrong at 35 or even 40, but I probably wouldn't feel comfortable buying at 70 right now, or even 60. Like, the pricing is a bit too high for this company that's going to be heavily impacted. So I think their balance sheet is very strong. Their management team is also very strong, and they also sell products people like. So things could pull back quite heavily in the short term, or even in the long term if there's a recession. Depends how the recession lasts. So those are the questions being tossed around. Though that's my view in terms of how I'm seeing things about how revenue could be pulled back, net income pulls back, and I kind of don't see the valuation holding up too strongly. Maybe me cutting this valuation in half might be a bit harsh, but you know, at the end of the day, this is an extreme environment. A lot of things are going to be sold down. They're going to be sold down below fair value, and that's your opportunity to buy into a very nice blue chip kind of situation. Because I don't see Starbucks, you know, going away. People still love their products quite a lot, and are very good at what they do. The problem is this current situation just has them, you know, has a lot of businesses heavily impacted. And the thing is, when you're, you know, you don't, a lot of people don't need to go out for coffee. Like, there's a lot more essentials that you need to buy that you would go out for. But going out for coffee these days, people might just like stay at home, invite their friends to come to their house, rather than going, okay, we're going to go out. And these days, with the operations going to more of a takeaway basis, you're going to just have to go out, buy the coffee, and then take it back home. Though, you know, you could be going to work, get a coffee, and then go from there. So kind of like we're just looking at how the situation is. We will have to look at the next financials to really get an understanding of how heavily impacted things are. So I think in terms of the short-term pressures, I think $70 probably won't hold up. $60 probably won't hold up. Maybe $50 holds up. But like I always like my margin of safety, as Warren Buffett likes his margin of safety. And I think that 35 to 40 is a good kind of value zone where you could be very happy and feeling a bit safer to buy into. But that's just my view. You might have a different view, and that's very fair. Hope that answers your questions around this company and the current situation it's in. Until then, yeah, good luck investing, everyone. And make sure to hold some cash because I think markets are just going to continue to drop. Until then, yeah, goodbye.